heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever. Psalm chapter 27, verse 1. The Lord is my light and my salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments.
Yo, good morning, everybody. Shit, my window's freaking cold right now, bro. Sheesh. But yeah, welcome. Hopefully you guys have had a good weekend so far. So before we get started, like I always do, I want to pull up the outline of today, what we're going to end up doing. I'm not sure if this is going to be a super full length, like 2-hour long video. I do have some stuff to do a little bit later. So we'll see how things go, if I'm satisfied with what we talk about. But overall, we're going to cover each one of these elements. Okay. And wait, let me see real quick. I think that's the right one. Is that the one? Yeah, this is the one right there. Okay. Where did it go? There it is. So, we do a full analysis on these days. Obviously, those of you who have been with me for a while, it's just review. If you haven't had a chance to screenshot these, like this thing right here, you really should, because it basically gives you an outline of what you should do, or what I recommend you should do every week. It just gets you in front of bias and narrative. It really, really helps you gain clarity as far as what you think price is going to do. So we're going to do a full risk on, risk off, bonds and yields, DXY. We're going to break down every single asset, from the currencies to maybe even commodities and crypto at some point. But essentially, in a nutshell, what we do, right, we look at higher time frames to lower time, or well, just higher time frames, because that's where narrative's at for today. We outline liquidity mapping. I go over that process, which you guys know. We talk about close proximity PD arrays, premium and discount, current dealing ranges, right? Whatever's contextually in price that can help us build a narrative. I put that in your lap. Very organized, continuously repetitive every single week. Today won't be any different. We talk about Power 3. We talk about market maker models. We talk about our invalidation, validation scenarios. We talk about currencies. And then, of course, the indices, which is the main asset that I like to trade. So, yeah. So with that being said, if you guys could screenshot this, that'd be great. So you can always have it, not only for when you're here, but also, when you're by yourself and you're doing your studies. Okay. So, yeah. And then, of course, I'll answer questions along the way. Sorry, let me... I'll leave that. I'll be observing stocks too, right? All these different stocks I'll be paying attention to, ETFs and whatnot. Just as accurate as the indices, right? Because it's universal. But yeah, so to get started, let's look at the news as always. So Tuesday is going to be probably a reasonably good trading day. We do have final GDP numbers coming out. Yo, you know what I was thinking, right? So the US, we generate apparently $7-ish trillion from taxes. So that's the income for the country. Yo, Elon Musk has $2.5 trillion net worth. He's like a large chunk of the full income that the whole country brings in. Isn't that nuts? And then you also think of like Nvidia and Apple and these companies that are trillion-dollar companies. I mean, that's a crazy thing to think about, right? It's pretty amazing how there's a place in this planet where that's possible, right? There's a lot of people that hate on the rich and Elon and all that, but I think that's fascinating. You have the ability to literally do anything you want, right? Get as rich as you want. I don't know. It's just something I was thinking about the last couple of days. Like, man, that's nuts, right? It's freaking crazy. And part of that jump in his net worth was because of the stock market, right? With SpaceX. So yeah, I just wanted to see real quick. Can you guys let me know in the chat how the quality is on the screen? I don't know why it looks kind of pixelated from my view. Just let me know in the chat if everything's okay. You can see everything okay, hear everything okay. Just gotta make sure. Yeah, just throw one in the chat for me if you could. So yeah, I'm gonna wait for one of you guys to let me know because I'm not sure. I don't want to do the whole video and it's shitty quality. Let's see. Yeah, it looks really horrible from my studio view. I don't know. Oh wait. No, it looks okay. I'm assuming. All right. Well, again, every time we start the week, we have weekly power three we think of: Sunday, Monday, accumulation, manipulation; Tuesday, Wednesday, higher the low of the week, starting the move. Preferably Sunday, Monday drives us into a PD array. Like if we're bearish on the week or overall, we'd like to see ourselves get above the open price from Sunday, above the new week opening gap, or at least at Sunday's open price. Hit some type of PD array that we could frame our smart money reversal on, right? If we're continuing to drop, that's the ideal scenario. Like if I'm a swing trader, I'm looking to sell above the open price only for Sunday, right? If I'm looking to buy, I'm looking to position myself below that weekly open price as I'm looking to go higher, okay? So if that's the swing trading perspective, we're going to have to obviously have that same perspective when it comes to us trying to navigate the overall weekly range. And again, the whole process that we employ here is just simply looking for the next weekly expansion. Okay. So that generally occurs around Tuesday and Wednesday on a traditional week, unless, of course, there's going to be like a consolidation throughout the week going into Wednesday, maybe Thursday morning that creates a Thursday reversal, right? So there's different profiles, but we're not going to know exactly what the profile will be until about Tuesday-ish. Sometimes it pushes it out, right? It's a little bit messy, but hopefully that's not the case this week. Maybe it is, right? But we'll see. But this is kind of how we set the framework, the groundwork for what it is we're looking at on a new week. Okay. So keep that in mind as you walk forward through the week. Think of power three when you look at that weekly chart for whatever asset you're looking at, because that's what we're looking for, right? And then when you go to the daily, go to the 1 hour, 4 hour, you want to keep these things in mind. Okay. So Tuesday, Thursday, and Friday, these are going to be the 3 best trading days. Obviously, it could have something happening on, Sunday, Monday, Wednesday. But when there's no news, you think automatically low probability because there's no news, right, to plan out the manipulation or the volatility injection. So what we do on these days, if we do trade them, we have to pay close attention to the macros. So you should take no trades that are not close to the macros during these days. You shouldn't take trades outside the macros anyways, right? I mean, you can. There's people that do. I mean, there's even some people that go a step further and say macros don't exist, which is absolutely pathetic because you could just clearly see every single week, even on every live call that I do, privately and publicly, we wait for the macros and it reliably shows up like a bus stop, right? So, and those macros are just specifically utilized to time when price is going to reach for a PD array or liquidity. Okay. It's as simple as that, right? So if you're waiting for a move to happen towards a particular level and the whole hour that you're trading in hasn't ran, wait for the macro because it's literally programmed to do so, right? To reach for those to spool towards those levels, right? And sometimes it'll move beyond the macro, right? Like it'll set up a move in the macro, right? Within that 20-minute window, it's potentially being held, but then once we see it break out, starting at that level, right, in the macro, whichever PD array or liquidity pool it's resting at. If we could see that the move started from the macro, or if you can identify your model in the macro or a PD array that's in the macro that would set up your model, it's okay if you can define that to take a trade midway through the macro. Okay, you have to be aware of what's happening, right? And what levels were presented or left behind inside that macro. So again, you heavily base your opinions or engagements on days where there's no news in the macros, but you should do it in general. You should make it a habit every single week. If you take trades outside the macro, you're messing up. Okay. Until you get familiar with the macros, this is what you should be doing. Because remember, it's time, then price. Excuse me. Okay. So if time's not in alignment with whatever it is you're trying to do, you're not doing things right, right? You're making it more difficult than it has to be. If you're entering at random times of the day or random times of the AM or PM session or London, you're really making things more difficult than it has to be. You can literally time your setups when they're going to show up, but you'll never know that unless you go in and actually study, right? And get back tested notes and examples of this phenomenon unfolding, right? And again, no one could do that for you. I can't do it for you. ICT can't do it for you. Nobody else can do it for you. Okay, that's the only way you get pattern recognition. That's literally it. A lot of this industry, a lot of this job requires or is hinging specifically on your ability to recognize certain signatures in price action, right? Good morning, ATM. What's up, bro? Appreciate you hopping on. Can you guys see things properly? I was trying to ask earlier, but I'm not sure what's going on. Yeah, let me know in the chat if you could see everything okay. It looks better on my end, but it looked like absolute shit a second ago. Yeah, I know. I hope he's okay. Normally shows up regardless, but hey, he'll see the replay hopefully. But yeah, ATM, if you could just let me know if you could see and hear everything okay, that'd be wonderful. Because it's in the back of my mind right now. I'm worried about it. It's kind of distracting. I notice there's a really, really big lag. It's not that clear. If you can go to your settings real quick. Damn it. I knew something was not right. Go to your quality settings and see if you can adjust it. It looks like it started on the like one of the lowest settings on my end, but then I went and adjusted it and it looked fine. Let me know if you guys have the ability to do that. Should be able to go to like the gear, the settings gear. Let me actually go look at that too. See if I can see it for myself. Yeah. Yeah, it gives you the opportunity to turn it up to even 1440. So if you just go in and edit it, see like right here, come up here to this thing, click the setting, you can adjust it. For whatever reason, it started here, which is very strange. But if you go to this and put it as high as it has, I think things will be okay for you. Okay. So yeah, let me know in the chat if you guys, okay. Oh, you have it adjusted? You have it adjusted and it still doesn't look right? Damn, I don't know why it would. Shit. I know for a fact that once the live is done, I know for a fact you'll be able to turn up the high quality. I don't know why it would be having a problem. I knew something was wrong. That's why I wanted to ask y'all. It doesn't look normal this morning. I'm not sure. I have full signal and everything, but yeah, I'm not too sure. Something that I want to point out as well before we get into the chart. Come over here to X real quick. Where is it at? So I want you guys to look up. I want you guys to look up Financial Juice. Okay. Financial Juice. Whoops. What the hell? So if you search up Financial Juice on X, right? That's a really, really good one for news. Okay. We have the economic calendar, right? I've been noticing this, right? We have the economic calendar. We have days where there's no news. We got to have other ways to find active news that's going on, right? Because there's a lot of times when there's certain things unfolding and we're not aware of it, right? So Financial Juice is one of them. You could look up, what's another one if I can remember? Tradingterminal.com. That's also a really, really good one. Sometimes there's news events that are just not shown on Forex Factory. But Financial Juice X is a really, really good resource, right? So you can go and look. I'll try to remember the list that I have of news people, and then I'll probably send it into the communities. But this is very important, right? Because I mean, Trump comes out, there's hidden press conferences and all this stuff that just pop up randomly. So even on the phone, I have to blow up the screen, share to see it. I'm watching TV, it's fuzzy, kind of small phone. Maddie, did you edit the quality? Yeah, I'm not sure. Hopefully, well, if anything, if the stream quality doesn't look right, it'll be okay later on. Yo, what's up, Chowezi? Appreciate you hopping on. So yeah, I'll build a list of the things that I have for the news, and then I'll share it with you guys later. It's very, very important. right? Actively in the morning, before you even look at the chart, you should be looking at the news headlines that are coming out actively. Because before the news says anything, you could have bombs dropping randomly, right? And you don't know. And you want to know that something like that happened actively. There's open source intel. That's another one who talks about a lot of world events and things like actively. So you want to keep that on your radar as well. I'll make a list for you guys and share it. But it's very important right now, given Trump in the White House, because things happen spontaneously. And you don't want to be caught in a trade setup that looks beautiful, but then some news event came out and you get screwed over, right? And you just didn't know. It could also be beneficial to you, right? When it comes to profits, right? Because if you're in a move and you don't know that there's a news event, but everything is still supporting your idea, and then some positive news comes out, about some topic that's beneficial to the U.S. economy, before the news says it, before this shows anything, it'll be on X. That's why X is the #1 news source or news platform, right? It's active, real time updates, right? So again, I'll give you guys a list to keep tabs on and turn your notifications on. But yeah, so Tuesday, Thursday, Friday, we have our news events. Remember, think Power 3, like I said. This is true for every asset you look at and all the assets we're going to look at. But very, very important stuff, right? And just when you're going to take a trade, on Sunday, Monday, Wednesday, you have to make sure that you're focusing heavily on the macros. You should, regardless, focus on the macros. But, right, it's just kind of is what it is, right? That it's time then price. Time being macros, kill zones, the time of the week, the time of the month, the time of the year, the session. Okay. Price is just simply liquidity and PD arrays. And it's as simple as that. Excuse me. Okay. So when ICT or anyone else talks about time and price, that's how you classify it. Okay. It doesn't have to be complicated. You just have to have time lining up with liquidity or a PD array. And if you can do that and find a signature you like, and you have a clear target and other supporting factors like the higher time frame narrative process behind you, intermarket relationships and whatnot, you're effectively using time and price very, very nicely. Okay. And so yeah, so hopefully that makes sense. But yeah, that's the overview for the news. So if we jump right in to the bonds and yields now, we can see trendline liquidity up here. We ran up into the bearish order block here. It's a 2-month bearish order block. If we go to the 2-month, okay, we have that order block right there. Drag that out real quick. I don't know why that is the default. Suppose that look like on the monthly? So it's pretty much that right there. We now have other wicks to go off of as well. So got this bearish order block. Okay. Actually, let's use this wick. It's the largest one in that area. We do have a wick right here as well. So as we go lower, right, we got this monthly wick right here. Or what is that, weekly wick? Monthly wick. Yeah, monthly wick. Okay, and again, this asset, the bonds, has a positive influence over the currencies like GU and EU and the indices. Okay. So whatever this does, it gives us insight as far as what could happen going into the indices and the other assets. That's why we spend so much time on observing this. Again, I get a lot of complaining telling me just go to the indices. My response to that is go somewhere else. Okay. uh, what? Right? Like, people get drawn to certain influencers or educators or whatever you want to call them, and they try to tell you how to do things. It's like, you can go do that somewhere else. Okay. Because what I do works, and that's why people show up. And I'm not gonna just go to whatever people are asking, right? I'll get to it. Okay. But if you want to learn how I'm able to do this every single week, every day in my private group, you're going to be patient, right? And learn, right? Because I'm teaching. Okay. And hopefully by now, those of you that have been with me for a while, you see the power in this understanding. I mean, there's a reason that I'm able to stick to a narrative and call it every week. And it's not just because I'm looking at the S&P or the NASDAQ, right? Or even the three indices by themselves. We're looking at a multitude of different things that influence one another. Okay. So then if this is like going lower, for example, and we got the indices reaching up into a bearish PD array after it's been bullish, but we're seeing the bonds drop and the yields rally, right? Just hypothetically, we can have a pretty good idea of whether that bearish PD array on the indices is going to hold or not, right? We'll have back-end intermarket relationships and fundamental analysis showing us that that bearish order block in that case would hold in price, or we would expect it to hold. And then if you see that happening, plus SMT happening, plus dollar going higher at that time, or hitting a bullish PD array, then you can imagine how clarity manifests itself and how much stronger conviction you'll have when it comes to, in this hypothetical example, the indices going lower from a bearish order block or a fair value gap or taking some high, right? And then reversing if there's like SMT and whatnot, right? So again, there's a reason that we spend so much time here. And, you know, I mean, you don't have to use it, right? You don't have to do anything really. But, you know, if you like the way that I do things, if you like how accurate it is every single week for years on end at this point, there's a method to it, and it's not going to be just one asset. Okay. And we have a depth of knowledge. We don't just have a very myopic, one trick pony. We're only right every so often, once in a blue moon, right? There's a method to why we're able to do what we do. And if you don't like that, again, there's other people that do backflips off their freaking desk and smash their monitors and, entertain you by focusing on one asset. But they can't do what we do. So you got to make a decision. So yeah, again, when we're looking at this, we're trading up into this potential BPR. We're a little bit beyond the midpoint, a little bit deeper into that range than I would have liked. We got 50% in there. So we are closing at that. So unless we lose this high, there still has a chance to want to drop. If this drops, we may end up seeing some type of selling interest take further shape in the indices, but we'll have to see, right? There's a bullish seasonal influence for this time of the year when it comes to the indices, which I showed you guys last week. Hopefully you guys took a screenshot or go to my private group if you're in there, go to the seasonality section and screenshot or download the video. I literally made a video of something that's a paid service, so then you guys don't have to pay for it. And every 4 years, I always revamp it, right? I always get the fresh one, saving you money, okay? And giving you a tool that is absolutely spectacular. It's like a treasure map. It's not a be-all, end-all, but again, it's one of those things that keeps us in line with the market and having high conviction levels when it comes to a narrative at very particular times of the year. Okay? So utilize that resource. All right? So we'll see what happens with this. If this breaks down below this while respecting the midpoint from this low to that high, we are inside this bearish order block here in itself from this weekly perspective. If we take this high out and close above the midpoint of this and take this high out as well, that's already 3 PD arrays, and a closure above this candle's open price here creates a change in state of delivery. So if it gets above that, we'll reach for, maybe the gap up here, maybe the highs up here, the trend line liquidity that's resting there. Okay. But we're kind of in the middle of the range from this high to that low, kind of at a premium. We have created this failure swing in here. So low, high up here, failure, and price is broken up above the suspension block, right? We talked about that as well, real time as it was unfolding. As it was trading into it, I said if it respects that, then we'll probably see price try to reach up into these levels. We are kind of seeing that, right, at this point. So we'll have to observe moving forward how this wick level that we outlined, how this up movement, down movement, that balanced price range is respected, and then also the order block that we just identified from this weekly perspective, how the midpoint of that and the high right here, how those are going to be respected. Because if this comes down into this like it is, taps the midpoint of this monthly wick here, stays above this order block, leaves this low intact after the stop run, and we get up above this candle, this is going to be a down close candle. Okay, so the next week that's coming, right, there's going to be a new candle that forms. If we get up above that, that's already 2 changes in state. And then of course we'll have this major one as well. So if it gets above that, we'll end up, going up through to the buy side. Okay. And we'll see what happens when it comes to that, because that will instigate further buy side delivery on the indices. But if it fails, then again, we may see at some point price having a hard time continuing to rally in the indices, right? If this does end up failing and going lower. Okay. So I'm gonna keep my attention on this low here, just in case. Again, I mapped this out as an intermediate term low. Okay, and it seems that it's held as such. Why is it an intermediate term low? Because there's a swing low there, right? Lower, higher low to the left, higher low to the right, lower low in the middle, trading into a gap with displacement pushing away, which ended up taking out this high. If it does respect this and rallies up above this candle, like I said, we could see this as a market maker buy model, right? Simply looking to target the relative equal highs up here. Okay. But if this breaks down, then we'd look at this as a market maker sell model. Honestly, if we get down below this high to that low's midpoint, that for me would be enough to think, okay, well, we're probably going to come and attempt some of this down here. Okay. So these are some things that I'm watching. If we take this high to that low, let's get a quick equilibrium measurement, right? So you see that as it hung around at equilibrium, we had a lot of consolidation. That's typical when price is going into not only a new quarter or getting close to a new quarter rollover, but also the summer months, but especially when we're hanging out at equilibrium. That's like a default. Doesn't matter what time of the year it is. Okay, if we're hanging around a higher time frame equilibrium point, you have the chance to get caught in consolidation. So the best idea is to wait for it to move away from it, right? Get us outside of that range, and then you can have a more certain opinion. Okay. But yeah, we'll see what it wants to do here. I do notice the SMT there, which is interesting. Okay. So we'll see how that wants to operate, right? It's buy side, sell side, coming down into that low. You see the wick midpoint, how perfect it's being respected. Look at the closure on this candle. Right at the equilibrium midpoint, 50% of the wick right there. That's flawless. Price came up, respected the lower 25% of this wick here. Okay. And now we've pushed away. So we got one change in state, second change in state, if we can continue to stay below that. So any return into that, we'd also have this wick followed by displacement if it can get through it. This wick, this bearish order block, and this fair value gap here, and this suspension block in here. If this was to get outside of those things to the buy side, there'd be no reason to push for shorts more, because that's multiple PD arrays being violated to the upside. But if it can respect those levels, you have no real reason to not look to aim for, at least on this 10-year, these equal lows here, right? The equal lows plus the trendline liquidity. We're kind of in a range though, right? So it's low probability. I would prefer to see us do that, right? If we're going to look to go short, I need to see also this one drop as well, get below this low. And then also this one would have to get down below that as well. We're very close to these lows here on the 5-year. So if we tag that and then give a strong rejection to the buy side, we may set up bullish SMT, and then that may continue to push for this to go higher. And again, that would support buy side on the indices and bearishness on the DXY. So again, we're going to have to wait and see what's going to unfold, especially because we're at the end of the month, right? If you go to the monthly candle, okay, the monthly candle looks like this for this month, right? Very wicky, very back and forth, not really too interested in doing anything too aggressively. We do see clear bearishness in the other, like the 5 and the 10-year. The 30-year is definitely indecisive, okay? Where's the CB1, ZN? Yeah. So we got, was there SMT there? No. Is there SMT at the highs? Yeah, there was that SMT there that led to the drop. But yeah, so we'll see what happens. Okay, but that's my opinion. That's my thoughts. Those are some things that we're going to watch for this asset. So a little bit questionable. Looks like it may want to look to gravitate lower, at least in the 5 and 10-year. But we'll see what happens as we begin the start of this new week. But we're going to have to make a decision, right? This high to that low midpoint, if it trades into it and stays in the upper 50, upper 25%, and we get displacement away, or at a minimum, the like a down close candle that gets violated to the upside, change in state of delivery, that'll support this continuing to go higher, especially if that happens in the upper 25% of this range. Because look where we began, right? It respected this, overtook it. A fair value gap being inverted like this is a type of change in state of delivery. And then like when you look at, you know, that whole area, you can identify order blocks being traded through, order blocks being traded through, right? Stutter candle, consecutive down candles, displacement through it. You see how perfectly it respects that. That continues to confirm that order flow is continuing or changing state from this retracement to go higher. Okay. So again, we need 3 PD arrays to be violated aggressively on this 30-year. We need the PD arrays above here, right, that I mentioned a second ago, to be respected and push lower through this low. And then this one will have to also smash through the lows as well, respect this inversion here, for us to assume that this is going to be bearish. And again, if this is bearish, just to reiterate, right, if this is bearish, that'll have a bearish impact on the indices. If this is bullish, it'll have a bullish impact or influence on the indices. Okay, so we want to keep this stuff in mind, all right? So yeah, for now, the 30 years on hold, 5 and the 10-year, we will observe, okay? So the yields now, right, look like we have broken down. We have high, low that took stops, higher high. So it's coming into my mob order block that I talk about, but also a bullish breaker, right? High, low, higher high. So sell side, buy side delivery. We have wick in there, plus a wick that overtakes that one. So it does have both sides offered inside this little gap in there. But we're going to have to obviously see, right? We do have the weekly order block right there. So we've traded into that a little bit. It's already showing somewhat respect to it. We do still have that little piece of inefficient price delivery up above in this area. So I'd be curious to see if we do end up turning aggressively from this bullish breaker, then we'll see price try to get up into that level before it targets here, obviously. But we'll have to wait and see, right? And again, if the bonds go lower, this should, if it's symmetrical and we're in a good environment to trade, this should turn around and go higher, right? If the bonds go lower, and then vice versa. If the bonds go higher, this will break this low, and then that'll be a bearish breaker. And then we may look eventually for the next, for this quarter to try to target this. Another thing, we're inside of a brand new quarter. Okay. So June 15th or 16th, I can't remember which day it was, this time. Sometimes it's the 15th of, the month that transfers the quarter. Sometimes it's the 16th, right? I've seen it go all the way to the 17th. But wherever that area is from those days, that's your open price for the new quarter. So you want to map out the open price from that time. Okay, so like the 15th, for example, the open price is here. That is the quarterly open, okay, in the way that we define it. Okay, so we will have to observe the quarterly open. All right. So we will make that orange. So yeah, that Q3 open, we want to see, because the start of Power 3 is accumulation manipulation. The middle portion, basically in this case, it would be the second month, right? And then the third month, right? You want to classify all that stuff as accumulation for the first one, manipulation. The second month generally is the meaty part of the quarter, just like how the middle portion of the day going into New York could generally be continuation of the move. And then, of course, the end of the quarter, right? The last week or two, generally, within that last month, can be the moment when price pulls back for the quarterly Power 3. So you want to classify things like this because, again, you're able to then anticipate when you look at price, you'll be able to anticipate what phase we're in when it comes to Power 3 for the quarter. It also helps you with bias and narrative, right? But when these times arise, you're able to then kind of position yourself properly, get your mindset in tuned a little bit sharper, knowing what phase we're in, right? Or what phase we could possibly be in, right? You're not going to be right every time, but it's a good rule of thumb, okay? So again, we'll look for how this is going to be respected in here. Price did come back up, respect the weekly order block, and now it's pushing lower. We have a change in state there. And we also got a shift in market structure where the body of this candle closed below it. So this here was a bullish order block. This high, low, higher high, right? Back and forth, buy side, sell side, buy side, sell side. We already closed below the midpoint of that. Plus a change in state with this order block after a stop run with SMT at the highs. And we got a shift in market structure. Okay, so we got to pay attention to whether this high, low, higher high is going to hold as a breaker, or if it's going to break down below this and then this becomes a bearish breaker to go lower. So we got to observe, right? It looks like they may want to take this low out, but again, we have this high to that low. That range should act as a BPR if it's going to be bullish. So the upper 50 to 25%, 75%. We want to see if that's going to be sensitive. We don't want it to come all the way down here. If it does, simply by breaking this low aggressively, if we can do that, that's enough for me to believe that we may be able to look for this. Before it gets to that, though, there's obviously lows you can target. There's a gap in here you could target. There's quadrants in this fair value gap here that you could target. I mean, there's a laundry list of things inside that price run if we were to get down below there as we're on our way to this level. And again, I want to mention this as well before I forget. We talk about this every week, but when it comes to liquidity, your very first important liquidity pool that you want to aim at or observe or map out is the current high and low from the monthly candle that we're in, the weekly candle that we're in, and then the previous day's candle, the last 3 days, preferably. Right? Those liquidity pools are the most near-term interesting liquidity pools, right? Because if price is going to get up to this high or if it's going to get down to this low, we have to break one of those levels, either the previous 3 days highs or lows, the weekly highs and lows, depending on what candles are close to us, right? Like I would say that this weekly low here, that is a candidate on the way down to this low. So if we are aiming at this low and it does get down there, we could still have a framework to set up around this simple low being targeted because it's a weekly candle. It's a previous week's low. Okay. If I was to actually visually show you this, okay, so that's the weekly low I just talked about. If we drop down, okay, you could see that low is here. What else do you see there? Well, we have trend line liquidity resting at that low. So you can see that when you identify these levels of liquidity, you can drop down and find even more context, even closer targets for you to then, on a day trading perspective, frame out liquidity, right? So that liquidity mapping list that I give you guys every week, which I also gave you guys today, sent it out yesterday too, it's very, very important, right? It has the main ones, but then there's other ones too that are involved, okay? So that is a potential candidate, right? If price does want to gravitate lower. You can see that this is another weekly low, okay? It's another weekly candle's low right there. How can we identify this easily? Well, you get the indicator, the weekend, Saturday, Sunday separator, and then you just turn it to gray, right? And then it highlights every Sunday. You could do Saturday too, if I'm not mistaken, but we don't really care about Saturday, right? We only care about Sunday because that's where the open price is. Okay, and liquidity. So, so yeah. So very, very, very helpful tool that I encourage all of you to have. If you don't have it, you are absolutely slipping. I know I've said this. I've said many things numerous times. And if what's being talked about is not followed or applied or at least attempted, what's really going on? I'm not going to say one thing and everything's going to click. It's a depth of knowledge that comes together once you have the different components understood individually. And that's trading, you know, that's trading. It's not like going to college and you read a book on a course or something and you just by default kind of understand what's going on. This has a lot of hands-on that's required. Okay. So just keep that in mind. Okay. So yeah, that being said, yeah, look, you see how I used that low, right? The one that I just pointed out, it targeted a previous week's low last week, right? We have numerous previous week's lows, right? We have Sunday here. I'm not sure why it doesn't have the line there, but Sunday is here. So yeah, Sunday's right there. So this is another weekly low. When we were up here, it targeted that weekly low. Price rallied up, goes back to what I just said a second ago. Price goes up above the open price, comes in, fills in this gap in here, right? And if I was a swing trader, I want to sell above the open price because Power 3 states that we need to get above that open price if we're going to short. On any time frame, we're looking at Power 3. If it's on a 1 hour, you want to sell above that 1 hour open price in that 1 hour candle if you're looking for a bearish Power 3 and a bearish trend. So you want to get above not only the daily open, the weekly open, but you also want to get above, in terms of positioning, any of the time frames that you look at, those open prices on those candles. The same thing's true with the 4 hour. Same thing's true with the 30-minute. All of it obviously works inside the higher time frame, but this is something you want to go study. Okay? This is stuff that I've studied and continue to study, right? Along with weekly profiles. They're very, very impactful. Okay? So again, you're either going to take the advice and go do it or you're not. And it's the same thing too with like people are going to be successful or they're not, right? And there's a very, very bright line that separates those two, right? And all of it has to do with action and doing the right things and changing and, you know, doing whatever's required. Okay. So yeah, above the open price, drop down, Power 3 bearish, right? We got the open price here. Price rallies up above the open price, ends up declining on Thursday for a Thursday or Wednesday reversal. Tuesday high of the week, Wednesday opened up. I'm assuming there was news at that time. In this case, right, it kind of bounced around. That would have been a shitty week to trade this asset. right? Open price here, right? Sunday's open. It peaked right below it a little bit, left a lot of this available, but it came down to target it, later in the future. Okay. I don't know why it's missing some of the Sundays in here. Yeah, open price there, price gets down below it, rallies up, Sunday closes up here. The high forms right there, right? Hit a liquidity pool going into Wednesday after it was accelerating. Took out that liquidity pool, and then that triggered in the opposing side, right? Low of the week here, price drops down below the open price on Sunday. Bullish power 3. Choppy week, still though, everything remains the same in terms of the fundamental theory. Okay, we got this one here, open price. Isn't it ironic how it comes right above that open price, sets the high, and then goes? Right? It does this nonstop. This is a study you guys got to go in and do. Right? If you haven't done this, I'm telling you right now, it's going to be a problem. Okay? This has to become nauseating to freaking study this stuff. Like, from a sense of like, I've studied it so much, it's so boring for me to study this. Once you hit that point, you've studied damn near as much as you should have, right? Right, open price here, price rallies up, drops down below the open price, right? After it sets the high and then aggressively trades lower. Okay, and it just does it over and over. I could sit here for, the whole entire day, for weeks, showing you the same stuff happening every single week. And this is true when it comes to the daily candles too, except the high or the low of the day, right? You still want to catch it below the open price if you're bullish, above the open price if you're bearish for the daily perspective, for the daily range. But, it generally happens exactly the same. If London is slow also, it'll give us that response in terms of manipulation to get us above or below the open price for the day going into New York. Okay, but if a lot of times if London was very quick, it may have set the high or the low of the day. Going into New York, if it was fast, it'll probably pull back, but then continue until a higher time frame level's met. Okay, so again, these are all things you got to go study. All right, and if you do study it, I'm willing to allow for you to send me screenshots and we could talk about it. Okay, so go ahead and do that. Nobody on the internet is telling you to do that. Nobody is willing to give you their time like that. So I'd take advantage of it if I were you. I know I would have. But yeah, so again, when it comes to the yields, we'll see how this wants to behave. Let's go to the daily. Again, if the bonds end up going higher, then this should end up going lower. But if we go to the weekly chart, let's take that look real quick. Okay. So we'll continue to monitor this. If it gets below that, right, we'll watch these levels, right? We did take the weekly lows. So we'll see if that wants to continue. I wouldn't be surprised again. What did we just talk about? If price opens up on this next candle, rallies up, think about what it's doing when it's doing this. If it's bearish, when the weekly candle looks like it's got the open and then it rallies up to a particular level in price, that being an order block, a liquidity pool, some other PD array like this wick here, the quadrants, maybe even the lower 25%. When we rally up above the open price to start the week, it's setting the wick. The wick is the manipulation above the bearish candles. The wick is the manipulation, right? The body is the expansion towards another PD array. Like in this case, it was the weekly low. And then the other wick is the closure, right? It hits the level and that's the response back into the weekly range to close off that weekly candle. Okay, so you want to break the weeks down like this. That's why we always start talking about Power 3 when we look at the news events. This big beefy part of the move generally happens around some news event. Because again, if the higher time frame, I've said this before too, but I'll say it again. The higher time frame moves need institutional sponsorship. So the beefy part of the move, the beefy body part of a weekly candle, most of the time is going to come from a news event that happens at some point during the week. The beginning of the week, Sunday, Monday, right? Sometimes goes into Tuesday a little bit. That's the manipulation and consolidation portion. right? And Tuesday, of course, sometimes sets the high in London, or the low if it's bullish. But the wick can be looked at from Sunday, Monday, maybe a little bit of Tuesday, but for the most part, Sunday and Monday should offer the wick above the open price if you're bearish. Tuesday, Wednesday is the body of the candle. If by Thursday or if by Friday, depending on which day hits a liquidity pool, the lower wick will then be present on either a Thursday or a Friday. Okay? I bet you have never heard someone break it down like that, right? But this is a fact, and you can go in and test it. Don't take my word for it. Go in and study these characteristics because you will be shocked. I guarantee you'll be surprised. And it's very clarity inducing because you know what you can expect for the most part going into every single week. Okay? And when you don't know, at least you have the foundational framework that can help you go in and justify or go in and gather some experience by looking at things in this way, right? And then eventually you'll be able to, very calmly, very effectively gauge what is taking place, right? Or anticipate what's going to take place, right? And this is happening on every single candle, right? So yeah, keep that stuff in mind. Very important stuff. Right? I could just come out here and tell you bias and narrative, and this is what I believe. But again, I think this is more helpful by going in depth with things. So hopefully you guys appreciate it. If you guys do get value, don't forget to like the video, subscribe to the channel, help me reach more people, the people that actually want to learn. Okay. And yeah, thank you in advance for that. But yeah, so we'll see what happens. SMT at the lows, trading into this range. We got to see if we can start displacing away from that, then we may look to see price go up a little bit further. The 30-year is definitely aggressive, so we're going to need a lot of conviction reacting from this level. Preferably, we don't take this low. And if it doesn't take that low, then again, we can assume that this is acting as a bullish breaker, also a balanced price range. So the midpoint, we shouldn't even see get taken out. If it does, then again, we're bearish. And longer term, we may end up getting a little bit further down to this level. But for the most part, right, we'll be in a mode of waiting just like we are somewhat with this asset, 30-year. We got to see a breakdown. If it's going to go lower, right, and this one, I mean, kind of looks pretty similar, right? So I don't like that. So we'll have to wait and see what happens, okay? But these are the levels I'm paying attention to. This is the perspective for both these assets. So now that we got that out the way, let's actually jump to the dollar. So the dollar has accelerated aggressively. This needs to be supported by the yields for me to trust it. If the dollar is in fact going to continue to rally aggressively, I'm hearing anticipation for rate hikes, which is diametrically opposed to what has been pushed for like the last year and a half, right? So, I mean, I guess that tells you if they're going to hike rates, that means that inflation is not doing too well, right? So there's things on the back end that are a concern to those in power right now. So if we do see that there is, a rate cut, that's going to mean, or a rate hike, that's going to mean that the dollar will rally. Okay. That will mean that the yields, okay, will rally if there ends up being a rate cut or a rate hike. Right, a rate cut means bearish dollar, bearish yields. A rate hike, right, that means that the yields will go bullish because it's hiking the rate. So if this goes higher, again, it has a positive influence on the dollar. So that would be a cause behind the rally in here. The market will have just been basically pricing in that opinion or that move that's being taken. Okay, so yeah, keep that in mind. These are pieces on the chessboard that are moving around that, again, you have to be aware of. And again, you want to get Financial Juice, right? That's also a website. You also want to go to Trading Terminal. You want to have Forex Factory, and you want to look for Unusual Whales, I think it's called on X. Those guys are pretty good. Tells you some moves that are taking place. There is this Bloomberg guy. Let me see if I can find his thing. There's open source intel. You want to get that as well. Where's the guy? Walter Bloomberg, this guy right here. Okay, you want to look at this guy. Okay. Tells you a lot of things actively that are not being talked about. Unusual whales. Why the hell am I not following him? That's weird. Yeah, he's a good one too, right? He talks about a bunch of different stuff. There's another one. I forgot what the guy's name is. Let me try to see. Yeah, if you type in MRKT right here, this guy's absolutely amazing. I mean, his his tool. I mean, he doesn't trade ICT, and honestly, he talks crap about ICT and all kinds of stuff. But right, he posts things like this. Right, it comes up out of nowhere. It's an AI software. I think the tool is really, really good. So if you wanted to get even deeper on the news, you can with his content, right? Or you could just simply do what I'm doing and follow his X, and you get plenty of news from that. So yeah, very important. We got a lot of stuff coming. We got midterms coming. I mean, there's so much stuff happening. So you got to be prepared. The market may end up getting really, really wild. It's already been pretty wild, but it may get even more wild given that it's an election year. So you want to be able to be ahead of some of these news events, which I'll help you, obviously, because I'm paying close attention to everything every day. But, you know, it's going to be good for you to do it on your own as well, right? Have that doubled up effect. So we did see for the dollar, there was SMT with euro. Obviously that failed, right? It blasted through it. This right here is the what is it? The tactic I've taught you guys called deferred liquidity. Okay. So we traded up into a high resistance level. Instead of price rallying aggressively through it in one full swoop, price tagged it, gave people the opinion that this was strong resistance, right? The more times it taps a level, the stronger it is, right? And it shows them just how strong their retail concepts really are by breaking through them in 2 candles. Okay. So this is deferred liquidity. Price trades into high resistance, right? This high, that high. It's a stop run. Then you take this high and that high, right? It ran up into it, failed, broke down. So that is a failure swing, which if it was going to go higher, which we did talk about a likelihood if it broke down below this low, or if it didn't break down below this low, but it then created a swing high, failure swing, goes from high resistance stop run to low resistance failure swing. Price sets a low, breaks that low, and then aggressively reprices through it. Okay. Looks just like this diagram that I actually shared the other day. So this is the logic. Let me pull it up real quick. Okay. So price drops into high resistance. Okay. Sets a low, sets a high, breaks above that, comes back into a PD array. This is a bearish example. Takes that, and then quickly after it takes that liquidity, because it's aiming for these lows in current chart, right? It was aiming for these highs up here. It set a failure swing, just like in this example, how this low and that low sets a failure swing, right? This probably should have drew this a little bit lower into that. But it's consolidation. That's high resistance when it trades into it. Okay. So it tags it, then sets failure swing. Maybe it sets another failure swing. That's building liquidity. And if you have a logical target down here, like a PD array or some other thing, you expect that if it trades into the high resistance level and then stalls and you're still bearish, or in this case, still bullish, you should expect that it's going to take some short-term high that it forms, because that's your counterparty to then couple with this sell-side liquidity. So price rallies up beyond the high, triggers them in, makes them think this is still strong support, and then price smashes aggressively. In this area right here, I can tell you, you will find the absolute best, easiest, most effective market maker buy or sell models that you will ever find in the chart. You want to trade market maker models? You want to get the highest of high probability? You need to get better at identifying the deferred liquidity logic. Go in there and study it. That is not an overstatement. That is a fact. Look at how quick that price ran. Okay. If we come over here to this 1 hour chart, we have a market maker buy model, right? Didn't necessarily offer, right, a clean retracement into that, but nonetheless, it rallied up aggressively through this high to that low. Once it started its rampage back up into the highs right there, this high to that low is now a balanced price range. This gap in here, we don't need to worry about it coming back. Why? Because as buy side, after the gap formed, buy side, sell side, displacement to the buy side, balancing this piece of price delivery. And then once it takes this high here, that balanced the whole entire range. So what did it do? Stayed in the upper 25 to 50%, right? Closed above the midpoint of this fair value gap, in line with this high up here. This high was purged with a strong displacement, leaving a fair value gap. That is very high probability if you have a level up here that you're targeting. When it has a displacement through that, you shouldn't see that fair value gap get traded through entirely. If it does, it may turn. But ideally, if you're bullish in this instance, you want to see that upper 25, upper 50 have a closing, have a candle closure as it breaks beyond it. We have consecutive down candles in here, okay? With a stutter candle, you take that open price, drag it over, that is your full change in state, your confirmed change in state of delivery. And the price comes up, tags that, we have high, low, higher high. This fair value gap's not expected to be targeted because it's got high, low, higher high. That is a balanced price range. So this whole range got balanced based on the explanation I just told you. And then this one here too, we're not at the liquidity yet. Price dropped down, price rallied up, hits the liquidity, comes back down, and still respects this as a BPR, still leaves this open. And so what happened? Price rallies up. We have this high to that low. Price gets above it. What does it create? Right? It's creating blocks of balanced price delivery as price displaces, taking external to internal, right? Staying in that upper 25 to 50% of each retracement. Same thing over here, right? When it trades outside of it, comes back down. What I just taught you right now, right, very quickly, is some of the most valuable, powerful variations to the understanding of balanced price ranges that you will probably ever find with any of these indicators or any of these educators. Okay. I mean, I can't even overstate how important what I just described to you is. I've taught it before. I talk about it every day in my private group. But again, if you weren't listening before, I sure as hell hope you listened right now. Because again, if you look at it this way, you're not going to be concerned about many, many different things. And it opens up a world of clarity that's just ridiculous, dude. Thank you, Tony. Ironically, you're the first person to tell me that. Sadly, you know, fathers aren't appreciated enough, right? But it is what it is. So yeah, hopefully this stuff made sense. If it doesn't make sense, let me know, of course. But hopefully you guys pick that up. But yeah, so with that being said, if we go back to this daily chart, think about it. What I just showed you on that lower time frame operates on the higher time frame. So what happened? High up here to low. What should happen? Price, once it breaks the high, if it's bullish, should stay in that upper 25 to 50%. Okay? Did it? Yes, it did. And it continued to rally. Then what happened? We got outside of the high up here. Okay? Copy that. Paste it. Okay? What should happen? Let me know in the chat what should happen once we break this high. Right? If you're still bullish with this range being a balanced price range based on the understanding I just shared with you, what should happen when price breaks above the high right there? What should be respected in this previous range? Let me know in the chat. There's a massive lag. Holy crap. The equilibrium where it started from. Yeah, equilibrium, but what is a even stronger confirmation? So we have equilibrium, and what else? There's one more level. Right? If we have that range or retracement that goes higher, or again, anything that goes lower to go higher is looked at as a buy model too. But once it goes lower and then goes higher, and we outline that range, right? You got equilibrium, so 50%, right? That's like the max we want to see respected. But what is the next level that makes it even more clear that we are in a rapidly moving, in this case, buy-side delivery? It's just like any of the other PD arrays, right? Balanced price ranges are a PD array in themselves. They could be used as a model for entry, right? But what should be respected? Just like in wicks and PD arrays and whatnot, when they trade into them, we got the midpoint and what? If we're bullish, right? Okay, so when you break down the range, we have equilibrium, and then what other level, if we're bullish, would we prefer to see get respected? Right, we just talked about it. So when we measure out all of these, I really want to make sure this is driven home because this is so important. I talk about it a lot, but we also talk about a lot of other things as well. But this right here is extremely significant. Right, we got equilibrium, and then what? What else should be respected when it comes to this level? Whoops. Okay, so VG. So when it comes to breaking down a PD array, or in this case, like we just been talking about, when it comes to breaking down a balanced price range, we have the equilibrium point, and then what other level should be respected if we're bullish, right? When it trades outside of it, what levels should be respected? We have equilibrium, and then I said one other level. Which level would that be within that previous range? If we're expecting that price is going to keep going, right? What is a very clear indication? There's equilibrium that needs to be respected, but what else? Once we break out of the range and return into it, right? The different PD arrays, right? That's obviously part of it, but I'm looking for something very, very particular that we've talked about. So let me know. Hopefully you guys, I think you could see this, hopefully. Oops. Right, well, we've said multiple times when price trades into a BPR or trades into some PD array, if we're bullish and it's a bullish PD array, we want to see the upper 25% and go as far as the 50% equilibrium point of that PD array get respected on a closure basis. Again, we've talked about this before, but it's the same thing with balanced price ranges. The higher we can close in that previous range relative to the 50 and 25, or in this case 75% of this range here, the higher it closes, the more dynamic and trustworthy that buy side delivery is, right? And again, it's the same principle when it comes to the different PD arrays. When it's in a wick, we want that upper 25 to 50%. If it's a bullish order block, the upper 50 to 75%, right? If it's bearish, the lower 75 or lower 50%, right? Good morning. Yeah, I think that's DJ, right? Good morning, DJ. But yeah, so again, you want to burn this into your head, all of you, right? It's very important when it comes to order flow confirmation and whatnot. It's very important when you're looking at a PD array. It's not just like a random point in the PD array that we should be expecting. If it's bearish, when it trades back into the PD array, we prefer to see that lower 25% have all the closures below. It could wick through the 50% and beyond, right? The body closures have to stay below the lower 25% to lower 50%. If it's going higher, we need to see the upper 50% and the upper 75% being respected on a closing basis. Did it do that here? Yeah, twice. Excuse me. And what resulted? Fast-paced buy-side delivery. Okay, same thing with wicks. When it trades into the wick, upper 25 to 50% needs to be respected. What does that tell you? It tells you we're in a heavily bullish market. That also can be coupled with what you're targeting, right? Is it going to get up here? I don't know. What's the candle showing you, right? Because it's very important, right? Very important. And all you got to do to master this concept is go into your back testing, go into the chart, and only look for this. Look for your favorite PD array, look for your model, right? Whatever you use to get into an entry. Or you could just simply go in and look at PD arrays, right? Look at an order block, look at a fair value gap. If it's bullish, you expect that lower, that upper 25, upper 50% should be respected. Okay. And if it's bearish, that lower 25% to 50% should be respected on a closing basis, and get a large amount of screenshots proving this to yourself. Because I could say this and you could take my advice if you trust me, that's fine. But in the heat of the moment, when you're pushing the button, you need to trust you, and you need to know that you know that you know. Only way that comes about is if you do it and go in there and study these things individually. All right. And you could do this for every PD array. You could do this for every model for entry. And you should, for the most part, see the same characteristics for any of the PD arrays. When it trades back into them, it should respect those levels, right? Break it down into quadrants. And then if it's bullish, it needs to respect the upper 25 to 50%. If it's bearish, it needs to respect the lower 25 to 50%. And you'll notice that when it doesn't and it closes beyond those levels, a lot of times it'll go the other way. And if 3 PD arrays are violated going the other way, you now have to switch to the other direction. So, this whole situation that I just described is literally, it's so dynamic, right? And I hope I'm able to communicate it and the importance of it. But it's like, if you're not doing this and observing this right now, you guys absolutely should be. Because again, when we're in the chart looking at candles printing on that 1 minute or 5 minute or whatever time frame, I'm keeping this in mind. When I see a displacement, okay, where's a PD array when it trades into it? Let's see, can it have a closure above it? If it does and we displace, it's worthy of a potential consideration for a buy. Reverse is true when it's bearish, right? Trades down, comes back up into like a wick or a bearish order block. We need to see it close below that 25% to 50%. And if it does that and then displaces away, that's a strong confirmation we will continue. And if I have a logical sell side target, I have no reason trading towards it, or no reason to worry about trading towards it, because the candles themselves are telling us the story. Yeah, well, Tony, this idea that I've just shared, it's one of those things that helps you be patient. It helps you get confident, right, with what price is doing, right? It's very, very important, super important. And this same idea, again, can be used on the daily chart. And if you think price is going to do one thing or another on that daily chart, this logic, look, we're looking at the daily chart, talking about this. And I'm showing you the signatures that are occurring here on this daily. Okay. The same thing happens on the 1 minute. So if you enter in the direction of a narrative inside the macro, like we've talked about, or around the macro, and your model clearly shows, as it pushes away from your model, right, that entry that you're in, you want to look at the 3 PD arrays that are around your model. And if 3 of them get taken out, you get out. And you also, every time a PD array is delivered or created, say you entered down here, and this was the 1 minute chart. If you entered down here, say at, this up movement here, for entries in there, right? As price pushes away, you are watching. Okay, we pushed away. When price comes back down, where's it closing? Upper 25%? Okay, it's still worth holding. Price comes down, trades into this, right? Are we still in that upper 25, upper 50%? Okay, good. Have 3 PD arrays been violated? No. And if that's the case, there's nothing to worry about. You hold the trade. You sit there and watch. If you get stopped out, okay, look at this from the lens of, okay, well, 3 PD arrays, did they get violated? If not, it may have just been a wick to stop you out. And then if you can get displacement or continuation variation of whatever your model is, then you can get back in and use the same logic, right? The wicks, when they get created, it should hold up upper 25%, upper 50%. If an order block forms, or if there's a high, low in the retracement that trades above it, that upper 25 to 50% of that previous range that just retraced and then displaced should be respected, right? So, right, from this high to that low, upper 25% to 50%. That in itself, if you're executing a trade, is a very strong, very simplistic way to gauge whether what it is that you got into is worth holding. Because if it's not respecting things in this way, price is literally communicating to you in the clearest terms that it's not trying to go in that direction, right? And then if it breaks through it, you have to then consider, okay, well, if it took this high and then breaks through the midpoint, I may have been looking for a bullish order block, bullish for value gap, bullish breaker, whatever your model is. But once it trades through it, that would then create a new range for you to start anticipating. Okay, so if it does something like this, say this ended up breaking down, doesn't respect this, comes back up, maybe inverts that and then goes lower. Okay, well, you now have a low, high, lower low. So what do we do in that instance? Well, if I took a loss in here, I could go from the low to the high. And as long as it stays below that 50%, if price can trade back into that range and stay in the lower half, lower 75%, and I can get my model to show up in there, I could then look to participate, right, and go the other way. Okay? And again, every single time we got a retracement that creates an order block or whatever it's forming in there, you go from the low to the high. Lower 25% should be respected. If it trades back into it, you expect that's going to hold in there. Okay, you anticipate this. Okay, and you study this non-stop. This is the language of the market. That's why ICT says he really doesn't need anything on the chart except the open, high, low, close, and the candles. That's it. Because they tell you so much more information than you're aware of. This is part of that, right? This is a, hopefully very clear idea showcasing that opinion, right? And again, anytime it breaks down, retraces, comes back into a PD array, and then pushes back in line with whatever your narrative is, when it breaks the low, you do it again, right? If price is going to, continue to drop towards this low or, whatever the case may be, when it trades back into it, we don't want it to come all the way up here, right? We don't want it to really even come too deep into this, right? If it does come up into here, right, and breaks through all these levels, you'd have to watch that high and see, okay, well, what is price doing? If we end up seeing that price breaks that, closes above it and then starts to really aggressively trade higher from, say, like this low, then again, you measure that out. Is it respecting this 25% to 50% now? If it does that, whoops. If it does that, right, and doesn't just wick the high and then aggressively reprice lower, right, it could easily wick the high here and then, but on a closing basis, close back below the 50%. It could just be a stop run, right? But if price was to break this and close above it, say it hit a PD array or whatever, took a stop, and then it retraces back into that upper 25% of the current range that just got traded through and then created from this low to that high, you would then observe this, right? Maybe you take a loss. Okay, well, you wait and then try to see if you can anticipate this and identify something like this unfolding. And if the upper 25% starts to be respected, great. Price is now potentially considered going the other way at some point. And then if it does it again, maybe you're still waiting, right? Pretend this is the 5-minute and this is what's going on. Well, we have a high, low, higher high. We have a high, low, higher high. That would be confirmed to be respected here with this and then this. And then once this high is taken, you now have this high. Well, you now have this low to that high. And then, of course, you have the bigger one too. So equilibrium there, equilibrium there. So as long as price, when it trades into those levels, it can respect those midpoints, price will then be considered potentially going higher, right? And then once it breaks this high, after it retraces, respects this level, and then we get displacement that trades outside of that retracement leg. Once it gets above that, you just do the same thing, right? External range taken to internal range, okay? Upper 75% to 50%. And if it just keeps respecting that on a closing basis of the bodies, body closures above the 50 and 75% is what you want. If you're bullish, right? If you're bearish, right? The lower 25 to 50% on a closing basis. You want to see price respecting that as you're managing a bias, managing a trade on that lower time frame, because this is the market telling you what it's doing. It's speaking the language to you that most people they don't ever get to understand it because it doesn't get told to them, right? Again, don't take my word for this, right? You need to go in there if you haven't already, which would be kind of surprising if you guys haven't already, because I've talked about this numerous times. But now I'm making it really clear, right? Because it's that important. Aside from Power 3, aside from market maker models, this is part of the way that you can end up being more disciplined. It gives you the ability to be more clear. Is price truly respecting this breaker I see it trading into? Or, well, where's the range at? Measure it out. Is it staying in the upper 25 to 50%? Right? Is it not wanting to close below the midpoint of that breaker's range? How about the breaker candle, right? If it's got the buy side here, then the sell side, you can measure out the whole range, get that upper 25%, 50%, or you could simply measure out the buy side move, right, prior to the stop run that then gets traded through. Because if the breaker is going to be respected, it should also respect the upper 25, upper 50% of that as well when it retraces into it. Okay? But again, it all comes back to how are the bodies closing when we return into that PD array, right? Is it staying in the upper 50, upper 25% and displacing away from it? If so, price is continuously respecting buy side delivery. And you should do in that case, continue to be bullish. Again, this is not just a one time frame tool. This is happening on every single time frame. When you see me live looking for an idea, now, hopefully, if you guys weren't aware of this before, right, which I've tried to make you guys aware of it, but if you weren't aware of it before, if you've never studied it before, now this is going to be undeniably in your face. When you're looking at price, if we're bullish, trading into a PD array, trading into a balanced price range, trading into a wick, trading into a gap, trading into any of these things that we want to see a response from, and we're bullish, we want to stay on a closing basis when we return into it in that upper 25 to upper 50%. And if we can do that, I don't care if the wick shoots through it. Wicks are damage anyway. I want the body closures to stay above the levels I'm looking to see respected, and then continue to push away. If we see that, you have no reason to be negative about what it is you're doing, or to think, oh, well, what if it turns? You have a tool that tells you if it's going to turn or if it's trustworthy or not. And then, of course, you couple this with the 3 PDA rule. Okay, like you can have the upper 25, upper 50%, but then there's 3 PD arrays inside that range, right? So if those get violated and the midpoint gets violated, I mean, it's undeniable that it's not going to go the direction that you're looking at. You have to switch, right? Especially if there's closures below them, right? Below those different things. Again, it's going to go over most people's heads, unfortunately. But I really hope that you guys go and investigate what I've just described, because again, this is real order flow. This is order flow, right? Screw these people's order books and all this other level 2 BS. It's a bunch of stupidity when you could just simply go in there and use the candles. They tell you everything you need to hear about what the language of the market is speaking to you. Okay? So yeah. So with that being said, again, hopefully you guys got value from that, right? I spend a lot of time on this right now because, again, it's that important. It's more important than what I think the NASDAQ's going to do, okay? You could decide what the NASDAQ's going to do if you master these things, which is the whole purpose and why I'm teaching this stuff. I'm not here to just give my opinion on where I think the market's going to go. You know, even though that may be very entertaining to see it work out perfectly every single week, the ability to be able to do that comes from the things that I share with you. I'm literally showing you how to do it on your own. So then you could just hang out here to hang out because you like the community, or you want to help me help other people, right? But I'm giving you all the sauce, all of it, right? Let me see. Tony just said that just solved my problem, and I have to wait for this. Yeah, Tony, I want you to do this for me, bro. I want you to back test these things. I want you to go in there and get hundreds of or as many as you can, like 20 a day, of times where you're outlining 1 PD array or 2, right, depending on where your skill set understanding is at. Simply highlight those PD arrays and do the mapping like this. Measure, right, a range out up to the, you know, high and low. Measure out order blocks, right? You could do one at a time, but I want you to do this and send me screenshots, right? And then observe it, write annotations. The upper 50, upper 25% was respected, right? Upper 50, upper 25% was respected when it returned into it. Same thing with the wick, upper 50, upper 25% if it's bullish. When it comes down, it should respect that. Look at this right here, right? Just look at this right here. Aside from this balanced price range, look at this wick right here, okay? We cannot even get to the 50%, let alone the 25%. So what happened as a result? Because the candles closed above that. What happened as a result? Rapid buy-side delivery, right? Rapid buy-side delivery. What could have been used to help us gauge whether that was going to be an aggressive run or not? The fact that we couldn't even get to the 50 or the 25% of this wick that price traded into and closed well above. That tells you we are heavily bullish. Okay? Again, I mean, it's just the way it is, right? And you'll know that this is the way it is. And there's no way around it when you do the back testing, right? So dig in, okay? Take the screenshots, and I am telling you, I am 100% certain you will be shocked at what you see, all right? Because it happens on every time frame. Look at this wick here, okay? Wick, upper 50, upper 25%. What happened? Price closed above it, displacement, right? We have this up candle in here. Price does what? When it comes back down into it, 50%, price closes above in the upper 75%. What happens? Price respects it and goes higher, right? I mean, there's so many examples we could look at, but I'm going to leave it to you to do the deep research. I gave you the idea, the theory, broke it down in a couple of different examples, told you how to study it, what to do. So again, I encourage you to use this as a drill, okay? Do it every week. Get 20 a day. Use one PD array today, but one PD array the next day, one PD array the next day. However you think you can get the best effective study, right? Even if you have limited time. You could go in there for 15 minutes and find this 20 times, right? And again, this helps you with bias and narrative. Think about it. Just think about it. If I can gauge whether something is being respected or not, and I can also internalize what those certain levels mean if they are respected, like in this case, the upper 25%, what is price telling me when it trades into that? If it can't even close below or closes right at the 25% and then starts pushing away, what is that telling you? It's telling you the price is bullish. It's respecting that upper 25 to 50% of that PD array. So if I find that on the daily chart and I'm seeing clear targets above us, it's helping me confirm by literally telling me that order flow is respecting that level and can't even get to the upper 25%. That is dynamic. And so when I'm trading, unless I lose those levels, I am sticking to that side of the market. How do I know to trust that? How do I know it's effective? For me personally, I've done this for 7 years. Okay, this year it's 7 years. ICT concepts specifically for about 6. This concept itself, probably about 5.5. Okay, I knew this a long time ago. And I've seen it for year after year after year. Probably hundreds of thousands of examples. Tens of thousands of hours. But that's why my conviction is so heavy, because I've done it so much. And that's why I encourage you to get that type of conviction, to go in there and do it just like I did, just like I just told you about. I'm telling you, it's unbelievable. It really is. For those of you that haven't done it, again, why am I spending so much time on this and not hurrying up and into the chart? You need to hear the point. This is one of those things that, just like Power 3, just like market maker models, this is real-time order flow tracking, right? And whether a PD array is going to hold or not. Price tells you that information. You just have to know what to look for. And what I just told you is what to look for. And you'll prove it to yourself. All right, I guarantee you, spend a week doing it. You'll be shocked. If you haven't looked at it this way, you're going to be like, wow, this was there the whole entire time. If I can get body closures above a bullish PD array or an area where I think price is going to be bullish, like that range or an order block, if I can get the bodies when it trades into it to close above the 25 to 50%, I can trust that it's going to be bullish. But if it breaks those levels and doesn't hold, it's probably going to go the other way. Right? If you go in there and study this with that in mind, I'm telling you, it's very sticky. It's one of those things that sticks to you like a porcupine, right? Or like one of those fly traps, right? Those little sticky things, right? Flies land on it, they can't get off. Yeah, a lot of these concepts that I talk about had that effect on me. And as a result, I share them with you. So it has that same effect on you. You can never look at price in a different way. You'll never escape it. It's always there on every time frame, right? And this concept is no different, right? Okay, so yeah, with that being said, again, hopefully I drove the point home enough on that topic, order flow tracking, and how to use the candlesticks themselves to confirm a narrative, to confirm a PD array is going to hold, right? It's a difference in what you teach, and you don't have any of that gimmicky stuff. Yeah. Unfortunately, though, people still like that crap, right? And people's attention span is like a gnat, so they don't get to gather the information that I share. At least people on YouTube. Those are my private group. They've kind of been conditioned already. to know like, okay, well, spending time here, it's not wasting my time. What we do actually does work. So it's worth hanging out for a couple hours, you know. But, it's undeniable. So at some point people will realize. But yeah, it's definitely different, highly effective, right? So it doesn't need a gimmick. It speaks for itself. It sells itself. I don't even got to say much. I could just look at the chart, show you I know where it's going, and I mean that screams louder than any ad could, right? Or any gimmicky nonsense. So yeah. But yeah, with that out of the way, again, hopefully you guys got value from that. Please go do that. It's a drill. Think about it as me telling you to go look for those things every single day. Okay? You want me to tell you what I want you to go do? Do that every day. Just that alone. And studying market maker models and Power 3 and one model that you like to enter with, I mean, I'm telling you, that's like a powerhouse. From order flow to framework to bias and narrative to, just a laundry list of things in terms of the technicals. They're, situated by just looking at those concepts. Right? You want to be more well-versed, then you look at some of the other things we talk about, right? But, if you've never heard or never recognized me talking about order flow in the way that I just did, that's your number one priority, is to go in and get familiar with what I just said. Because that's how you read order flow. I mean, it's just no arguing with it. When you look at it, you'll see it. Hopefully you've seen it right here. There's no arguing with it. You could see it very clearly when it trades into PD arrays, this behavior unfolding. When it breaks out of a range and it returns back down into that range, right? Like this, upper 25 to upper 50%. We're closing above it. What is that telling you? We're bullish, right? It's respecting that level. It should continue unless it was to break it. And if it violates it and closes below, we're more than likely to take the other side, right? Simple as that. The same thing with a PD array too. If it doesn't hold at least to 50% on a closing basis, it's probably going to fail. So you got to think about things from the other lens. Okay, so again, depending on what the bonds and yields do, we'll see, but dollar is continuing to go higher. There's conversations about rate hikes. So if rate hikes do unfold, we could end up seeing price get a little bit deeper up here. I do see that this target's up there, maybe this new quarter, depending on how we treat the upper 25%, upper 50% of this wick, okay? Depending on how it treats that, I will continue to see price go higher if it continues to respect this level, okay? So if we can respect that upper 25 to 50%, right, we should be able to see price continue, okay? So upper 50, upper 25%. See, as long as that stays intact, right, that's what we're going to be observing, okay? This right here was used as the accumulation, smart money reversal, first stage distribution, second stage distribution in the market maker buy model. Deferred liquidity logic, again, it's another thing that I've taught you guys. Retracement, balanced price range, rally. Now we got that upper 25%, upper 50% of this wick, right? We have the upper portion of this order block as well. So if it does break through that, we also have that order block to watch as well in the upper 25, upper 50%. And as long as we stay closing above that, in this case, stay above this low and it doesn't take that low, right? We have a lot of reasons to continue to see this go higher, especially if they give a rate hike. That's going to be bullish for the yields, bearish for the bonds, and we will see things start to tumble in the other assets. In this case, we've had aggressive run higher. We have a large wick up here. So, the next candle, right, we got to watch the lower 25, lower 50%. If the next candle trades into that and respects it and starts pushing away, we're in retracement, aiming for internal range liquidity. So you can start to see how much I use what it is I just taught you when it comes to gauging order flow and whether something should hold or not. You could do it even on things like this, right? Keep in mind the lower 25 to 50. If it trades into that with the next candle or two and respects it, it's still retracing. And all you do is map out a level it's reaching for. And then once it hits that level, right, you got to map out the upper 25, upper 50%. If it was to come down into that fair value gap, respect it and go higher, it's still respecting the upper levels. If it was to smash through it, when it returns into it, the lower 25, lower 50% should act as inversion in this case, right? And if it does that stuff, it's confirming what it's doing to you, right? And you could then trust it. So again, in this case, we're going to see, I wouldn't want to see it break this range. Again, the upper 25, upper 50%. If it trades into that, it should respect it. But in this case, I wouldn't even really want to see it come down there. It doesn't upset anything until we take this low out. But I'd rather see the upper 25, upper 50% of this monthly wick and this upper order block get respected. So if we are bullish, I'd like to see just a simple retracement to then go higher. Retracement, get below the open price from Sunday's open, right? Tag a level down here that's reasonable, and then look to try to go higher. We also have the buy side to sell side and then buy side again. So even in that, from the whole entire range, we have 50%, upper 25%. So if we were to break this low, again, we're breaking multiple levels that should be respected if price is going to go up to the buy side. Okay. So this level is important. This 50% of the wick's important. If it's bullish, I don't want to see it go through that because again, we have buy side, sell side, buy side that's now taken out. This high to that low is a balanced price range. This whole range in here should act as a BPR. Okay. The low right there, now up to the high. So equilibrium's right there. So we should stay in that upper 25%. Okay. If it's going to go higher, go through this and reach for this level, upper 25% should be respected. Okay. Could go all the way down to the 50%. But, you know, if it does do that, there's multiple levels on different time frames being violated. So we'd be able to adjust simply if it gets below this. But that right there, upper 25% of that overall range in there, it's literally right there at that low. So again, this low is significant. So we will use that as our invalidation. Okay, simple as that. So I'd like to see if we can do something like this. Okay, again, it has been really aggressive, so I would not be surprised when they look to pull this down. You see this wick here, large wick, displacement, right? I don't want to see it trade too deeply into this fair value gap. It should be a balanced price range. Okay. We have high, low, higher high. Should be a BPR. It treated it as such. Remember what I literally just talked about. This high to that low. Once we get above this high and complete that from low to high, when it trades down, it should stay in that upper 25%, upper 50%. Preferably, if we're really bullish, we want to stay in that upper 25%. What happened? Comes down into it, aggressively reprices away. What does that tell you? We are rapidly bullish. What comes as a result of us showing that respect to that? Rapid movement in the direction of the higher time frame narrative, right? Aiming for the PD array or liquidity. Okay. So again, hopefully this is extremely clear because it is very important. Okay. So yeah. So this is what I believe is going to happen with the dollar. Right? When it comes to the currencies, if the dollar is going to go higher potentially, we may see this return into this gap down here. Okay, for the currencies, I still have my target down here below. We have kind of tapped it a little bit. But again, we have a low, high, lower low. Okay. What do you think I'm going to point out? Well, if we have this whole entire range in here, I would like to see price stay in that lower 25%. That lower 25% is also meshed smoothly with a weekly bearish order block. So this low to that high, we're now below that. I'd like to see us close below the open price of that order block. Stay in that lower 25%, right? And if it can do that and we start pushing away again, maybe it creates an up candle that then hits this on a closing basis and then displaces through that previous up candle, creating a bearish order block, changing state of delivery. Once it does that, then I can reliably look to continue to push for my higher time frame bearish objectives, and I will look to trade towards that direction if I was a currency trader. Okay. What invalidates this going lower? Well, if we displace through the midpoint here, right, we count 3 PD arrays in that area. And we have a fair value gap here. We have a wick level in here. We have the up movement. I believe that is a weekly bearish order block right at that midpoint, right? It's just above it. Okay. And then we got the high. We got a fair value gap. So if this was to break this fair value gap, the midpoint here, which is part of the weekly order block, bearish, we got an inversion fair value gap here as well. So if it gets above that, it's a problem. Okay. And we may have to go the other way. And if it was to break above this high, how would we further gauge whether this was going to hold? Well, take this low up to that high. And then if price was to trade through that, when it comes down, upper 25, upper 50%, as long as it stays above that, we would keep going. Same thing with this. When it trades down into it, we want to see that upper 25, upper 50% get respected. Okay. And then as price prints these things, upper 25, upper 50% respected. Upper 25, upper 50% when it comes down into it. Until it violates it. Okay. Again, this is the same thing, same logic you're using for every PD array. Every single one of them. Okay. What are 3 PDA? Do you know what PD arrays are, potentially? Samanth? If you don't know what PD arrays are, I do encourage you to observe ICT's videos a little bit further. I would be assuming that you are extremely, extremely new. But, you know, even if you just wanted to watch the concepts, even if you're really new, the exposure to the high level of accuracy and stuff that we do here, I think would still be beneficial. But there's basics, right? There's basics content and whatnot. But yeah, we're inside of like a full-fledged top-down analysis. Let me see. It's the same thing on everything I noticed. As soon as you shown the current, exactly. What did I say, Tony? This stuff is so sticky. It's like there's a fog over something, and then you get taught this one concept, and then boom, it's just like a flood of like, wow, this has been here the whole time. Why did I not notice this? Right? And most of the time, you know, because I have talked about this on numerous occasions for, you know, years at this point publicly. A lot of the reason that, you know, some stuff doesn't really stick out at times, and later on, even if we've been talking about it a lot, later on it becomes more valuable. It's because your experience grows every single time you watch a video. Every time you hop on with me, there's something new. And when you start watching content, you have preconceived notions, what you're trying to hear, like a buzzword or a concept or something that you've been using. So some other stuff that's not familiar to you, right? Or your brain just doesn't grab onto it because you don't know if it's like what it does or you've never used it before. Over time, you start to learn as you gain wisdom and experience and see the things talked about more. You start to gain the knowledge of what's even more important. The significant things that you may have overlooked before become more significant as the wisdom and knowledge grows. That's why when you watch one video, you want to go in and watch it again, because that one video, you're at a particular learning stage. You have very particular knowledge. As you gain more learning or gain more knowledge, other things that you may have missed in the videos, right? Maybe you watched something and some stuff didn't make sense. But then when you go back and watch it again, because you have more wisdom, more stuff stands out, right? It's like, damn, how did I miss that? Right? And it's because you're focused on certain things when you watch a particular amount of content at that time. As you grow, more stuff becomes significant. So as you watch the videos, more stuff pops off, right? Both with my content, but then also with ICT stuff as well. Okay? So that's why that happens, Tony. So yeah, again, if we think the dollar is going to go, what do we think it was going to do? Go higher potentially, depending on how it treats these levels, then we should see that supported by this level in here, right? These areas. We got the gap in here. We have the wick. And what are we looking for, Tony? When price trades into it, we want to see closures below the lower 50, lower 25%. And if we can get that on a closing basis, it could wick through these levels. That's fine. On a body closure basis, if we get this to return into this and it closes below the lower 25, lower 50% inside this gap as well, and we get rejection, we will then again look to target these equal lows with the anticipation that dollar may look to go higher. If we do end up seeing, the yields go higher too, that supports it. And then the bonds, if they go lower, that would also support us seeing this go lower. Okay. So again, we're watching those levels, right? Watch this order block in here. Okay, this weekly bearish order block. And then again, we're also paying attention to the, where's it at? Right, 50%, 25%. We're gonna have to map that out. So yeah, that lower 25% with that weekly bearish order block, okay? So when price trades into that, those are the things we wanna watch. We have this wick in here, preferably when it trades into that wick, because that is a PD array, preferably we see the lower 50, lower 25% of that being respected. The next candle, if it shoots up and we can't even get close to the 25% of this bigger range, when we trade into this wick right here, that's a PD array. So if we get a candle that opens up, trades into that and closes below, and then we start displacing without even returning up here, that's even more dynamic. That's even more trustworthy. So that's another thing I'll be keeping in mind too. We also have this wick, right? Lower 25, we already fulfilled that. Lower 50. If we can't even get up into this, or this, and it just continues to break down, again, it's telling you we are super bearish. There's no reason to look for buys in these scenarios, right? If it shows stuff like that. And then you just take this information, bring it down to the lower time frame, and always remember that, right? Remember what's on the higher time frame and what's happening relative to order flow as you're looking to navigate those lower time frames, right? Because it's all the same. And if this was the 5-minute chart, I'd be looking at the same stuff. If I'm in a trade up here or wherever, as price prints, I'm watching these things real time to help build trust in the idea that I'm entering, to continue to support the idea that I'm taking a trade on, continuing to justify that order flow is supporting what it is that I just took an execution on. Okay, because again, it's not only a higher time frame topic, this is order flow tracking, right? In its purest form. With nothing on the chart, you can see these things. Okay, and the chart becomes a whole lot more clear, right? And then as you're managing a trade, it just builds that confidence, builds that trust, aside from all the other things that we do here and teach here that help you with that, okay? So yeah. So that being said, that's my opinion. All right, we did complete the market maker sell model there by peaking below it. We did close above that low. So, we'll see if that turns into a deeper retracement. If we are going to look to see this go lower, again, we have our levels that we don't want price to get through too aggressively. If it starts to trade aggressively through these levels, right, we do have this little piece of price delivery in here that's inefficient. Okay, there's no buy side offered in there, right? It's just a little piece of price delivery right inside there, right? Let's make it bigger. Define it a little closer. Okay, so we do got sell side in this area, but there's no buy side. There's not even a wick. We have sell side in that area. There's no buy side. So that's buy side inefficient. So this may stop price from being sensitive down here. It may aggressively race up into that before it's allowed to go lower, right? We could very easily see that take place. So yeah, buy side inefficient, okay? So we will keep that in mind. All right. So yeah, if we can't get it to respect this stuff in a sensitive manner, that's where my attention would be. And then we'll have to see how it respects that as well. Okay, but overall, until that happens, right, we can reasonably anticipate that we're coming down into this and we should be able to see this go lower, especially if we see the dollar do that retracement to then go higher. Okay, and remember, we literally called the shorts going lower into this level inside the market maker sell model when we were way back here. That's what, 1, 2, 3, 4, 5, 6 weeks ago. We were literally anticipating the market maker sell model to unfold. Go back to May of this year and go listen to the replays of what I said. We've called this. Every single thing from all these assets we look at, we have called them almost perfectly on multiple assets. And it's all recorded for you to go and verify. Okay. So it's not just hindsight, right? I'm telling you real time. And then look, a month later, 2 months later, it's right at the target we've called for weeks, for months, using the exact concepts that I share with you, right? That I literally teach you in great detail. Because, we understand what we're talking about. But yeah, so hopefully this stuff makes sense. If we move on to the indices real quick. We're already at 2 hours, so I'll get you guys out of here. So yeah, if we go to the weekly perspective, okay. Do got price breaking down, swept that low. What's happening with this fair value gap? Price closed above the upper 50%, upper 75%. It gave a wick, that's great, but it closed above. So what's happened? Prices aggressively ran up to the levels up here. We do have a rejection block in here for the S&P. We're at a rejection block / order block here for a bearish rejection block, bullish order block for the NASDAQ. I do believe, well, we do have an SMT here as well. So that SMT, depending on, again, what the dollar does, if the dollar, does do this rally, then this SMT at the highs up here that I just identified, that'll become very significant. Okay, so we definitely got to keep this in mind right here. We do have SMT right there. So if we can get this to stay intact and the dollar aggressively reprices higher, basically doing what I just showed here, goes lower, respects these levels and then displaces higher. Say we get the bonds to also go lower and then we get the yields to turn around, like we said, could be a possibility with a rate hike. And if we get a rate hike that gets announced as well, right, it's going to be pretty effective, right? We'll see this thing decline aggressively down to the sell side. Okay, so we'll keep that in mind. We got a bullish order block here. So again, that's kind of something that goes against that idea. This is the weekly chart, of course, but that SMT definitely has my attention. I didn't notice that the other day until right now. So yeah, that is potentially going to be something important. We do have bullish SMT here. I did identify the other day. So that's led to the return up, right? Not only do we have the SMT, but we also had the closure above the midpoint and 25%. Okay. So yeah, when prices opening up this week, we're going to have to see how we respect this gap in here. Right? We've been talking about this gap for the last, week or so. Prices respected it, right? What happened? Price came down into it, right? We talked about price getting up above this. I'm not going to go into everything that I said last week, but you guys can go watch that replay of what I said. But pretty much price got above this inversion like we said it could do. And if it did do, we would continue to push it higher. And that looks to be the case. We have the upper 50, upper 75%. We did trade through it pretty solid. And we're kind of hanging around in here. It's not really exciting to get outside of this at the moment. So it's kind of lagging its way through. I would say that this S&T mixed with a breakdown below this low, that would be enough for me to then try to anticipate the lows in here. All right. So that's something that I would be watching. And again, we have SMT at the lows in here as well, right? Lower low, higher low. But again, it's going to be very dependent on what the dollar does and how strongly we respect this SMT. We also have this high to that low, 50 to 75%. Okay. Once we trade beyond it a little bit and get above this level, we would have to look for those upper levels to be respected if we're going to continue to trust it's going to go higher. Okay. We haven't necessarily broke that high. We do have a failure swing in here. So if we do run higher from this level, we have inversion, we have failure swing, low resistance. But again, we have SMT, and we got to see what the dollar does going into this new week. We are kind of range bound in this as well. We have a large range happening in here from the previous week, just overlapping candles. You guys know that when we have overlapping candles like this, especially on the daily chart, that is low probability. We're consolidated. So we want to see price break out. What way is this going to break out? How can you determine which way it's going to break out? Well, look at the bonds and yields. Whatever those bonds and yields are showing you, if you're in consolidation on the indices, you want to go with what the bonds and yields are showing you. So if the bonds are showing bullishness and we're in consolidation and we're seeing the yields show bearishness, right? So yields are dropping, bonds are rallying, right? Yields dropping, bonds rallying, right? If these markets are showing that, then we should see that translate to bullish indices, bullish commodities like gold and silver, bullish currencies, right? Again, that's why these assets here are significant, because you can determine on your own what these other assets are doing based on the market relationships that we talk about each and every week. Okay, that's why we spent literally an hour and a half on the bonds and yields alone, right? And again, you come over to these assets and it's just easier to determine what's trustworthy. Okay, so again, I'm watching this low. If we break this low, that will turn off my interest. Okay. Okay, and if we do take that out, all right, we have this breaker here. Notice the breaker, right? If we take the low to the high, price ran through, right? This inversion plus the breaker. What happened when we came back? We respected the upper 25, upper 50%, right? You could even go and map this out, the wick. Upper 25, upper 50%. Price traded into it and closed outside of it. That's not overwhelmingly bearish yet. Now, again, if we lose this low, things have now changed, right? Either short term, right? It may look to dig into that and then consolidate a little bit further because it's the summer months, or that's going to entirely shift market structure and we will break down trying to target these equal lows and maybe get down to even deeper levels, like maybe the rest of this gap in here potentially. Again, this is like super long term, like the next, maybe even next quarter. So we'll see, right? If we were to break down we may reach into that. Before we get to that, though, we have the low here on this candle, low here. We have the wicks, right? The wick here. Got this volume imbalance, right? This volume imbalance. Those would be first and foremost what we'd be aiming at. But other than that, hopefully everything's made sense. But that's my opinion overall on the indices and all these other assets, currencies, indices, DXY, bonds and yields. So keep that stuff in mind, right? Write down notes about them. What did we determine for all of them? Right? I'll let you go back and decide. Right? Hopefully you were able to write it down though. But yeah, so again, if this does go higher and the other currencies, if they were to go higher, right, we're kind of seeing somewhat of a cracking correlation overall. Right? We are seeing this retracement. If the currencies continue dropping and the dollar continues rallying, we will see this low here get violated. Right? And if all of that stuff is in agreement, right, then we should see this continue to drop. We should see commodities look to drop like gold and silver. Because again, the intermarket relationship is what it is, right? Things don't just move randomly, right? They move together. Okay. So yeah. So hopefully all this stuff makes sense, right? If we break down below this, that's a shift or a change in state. Well, more so this one, because that's the highest closure. If we were to displace through that, right, we'll have the bullish order block here being violated, swing low being violated, and then breaking through this daily fair value gap right here. That will reclaim that fair value gap. So 3 PD arrays will be violated to the downside, and then that would push us bearish, especially if we see the dollar retrace and then go higher. Right? So that would be the game plan for that. And if we respect this wick here, upper 50, upper 25%, if it continues and we break this high, again, we got high to low, that's a bullish order block. It's also not only a bullish order block when it comes down into it, it's also a rejection block, inverted if we were to break above it and come back down into it. So bullish order block, bullish inversion rejection block, right? A bearish rejection block showing up that then gets inverted bullish if it gets closed outside of it. Okay. So that level will be sensitive. And we also now created a failure swing. So it would be, in that case, right, if that stuff falls in line, we would look at this high as low resistance to be targeted because we got relative equal highs. It's also a failure swing. Okay. So yeah, that's what we're going to pay attention to, right? Levels in here are going to be very solid determining factors. So I hope that each element made sense. I seen someone earlier say something about gold. All right, I'll give you gold. Let's go look at gold real quick. Let's go look at stinking gold. Where did it go? The chart. So yeah, we got displacement, or we got a wick and then displacement. So again, just like on the other assets, what I identify, I'm doing the same stuff here. Okay. Remember, we have an intermarket relationship that goes with the commodities as well, right? And if the dollar's going higher, these do the opposite, right? Gold and silver do the opposite of the dollar. That's the correlation that they have. So with the dollar rising, gold declines. That's what you should anticipate. And if it's not doing that, like if the dollar's rising and so is gold at the same time, that means that there's something fundamentally about gold that is pushing it aggressively bullish, and you don't force shorts because of the relationship. You have to wait for it to get back in line. Okay, but we have this large wick here from that, monthly chart, I think it was? Yeah. So that monthly, right, clearly order flow is bearish. Right, we got sell side, buy side, internal, back to sell side again, right? Sell side, buy side, so internal to external, internal to external, internal. My next objective would be this low. And then I also see these relative equal lows. So that would be where my next objective would be. And then once it breaks this low in here, again, we will throw our fib from that low to that high. And I would expect that the lower 50, lower 75%, when it trades into that, we're looking at bias and narrative for this idea, right? We want to see price go lower in that lower 25, lower 50%. Okay, and then if we move up a little bit further, let's go see something more pronounced. If we were to get real aggressive, we could then look to try to target this potentially. Right, we have this wick in here, right? That 50%, upper 75%. If it was bullish, we should have saw something like this continue. But now we're seeing that fail. After the response that took place here, rallying up, we've now ended up all the way back down below that into this range. That tells me that they have unfinished business inside this imbalance in here. We also have an imbalance in there as well. So that's right there in that target that I just laid out. Okay. So yeah, that would be my opinion on gold, right? If we go to the 15-minute chart, sure that we could find market maker sell model unfolding in here. Yep. Yep. Market maker sell model. Consolidation, accumulation, smart money reversal, balanced price range. Okay. Bearish breaker, low, high, stop run, lower low. This right here is the 2022 model. Stop run, shift in market structure here and all of this. Fair value gap, targeting equilibrium, or in this case, the gap. New week opening gap. Okay. So now, okay, we also have this liquidity pool right there. So yeah, I don't want to see it break above the accumulation in here. So that 50 to 75% right there, price should stay in that lower portion. You see how we're in that mid portion of that lower 25%? That right there, the midpoint of that lower 25% of the quadrant, that is called an eighth level. So that's also another measurement, right? If we go over here to the eighths, right? If we could stay in that lower eighth level, not even get to the 25 or 50%, that'd be great to keep going lower. Okay. So yeah, that would be my objective, my opinion, right? I'd like to see this continue to go lower. We'll see what happens. We came off this stop run. We're not quite done with the liquidity down here. And everybody and their mama look to invest in gold. So there's a ton of liquidity down below those lows. And we have those inefficiencies on that monthly perspective. And if we see dollar rally and do kind of what we discussed, you know, we should have a pretty solid dynamic price delivery aiming to target these lows down here. Okay, so keep tabs of that. Let's go to the 1 hour. See if I can get an even more accurate read. Yeah. So instead of the whole entire range, you could have the whole entire range. I like this last down candles range prior to the breakdown in this accumulation phase. But again, market maker sell model. So got that level. You also got this bearish order block. Okay, so if we can stay below this wick here too, say it trades up into that, respects that lower 25, lower 50%, we will see that thing continue to smash lower. Look, you notice the gap in here. How did it treat this gap? People could see this gap and think, oh, well, what if it wants to come back there? Okay, well, we have displacement, sell side, complete delivery. Buy side, and then sell side again. And we've pushed aggressively away. This is a balanced gap. Okay, so I would really have no real worry about price coming up into that level. Okay, the gap has been efficiently delivered. So I don't expect it to come beyond this level here. So it's pinned down. If we come all the way up there, that might be a problem. But even if it does come all the way up there, guess what? We have a high, low, failure swing, breakdown. So what does that mean? That means that the down candle right here, that is a mitigation block. So we should not see price even get beyond that. Okay. Even if it comes up there, this is what I'd look at. And unless price breaks outside this new week opening gap and inverts it, I will hold on to this opinion for gold, especially if dollar can retrace lower and then go higher like we talked about. I think this is absolutely easy read that this is going to try to go lower unless it upsets these things. But even when it upsets this stuff, instead of the sell model, I would look to simply go to the buy model, wait for price to get above this level, disrespect the mitigation block, and then use this up candle here, similar to how I'm using this down candle for the sell model. I would use this up candle, or you can encapsulate both of them, or this inversion in here as a level of support to then target the highs up there. But again, that only becomes part of the equation if we were to lose this new week opening gap. Otherwise, this is what I see, and this should, respect this high, preferably close below this wick, and then start to give us displacement as we go lower. Once it gets below this fair value gap in here, that could also be used to frame your model as well. This is a 2-hour chart. If you go to the 1 minute or 5 minute chart, once we break through that, you should be able to see your level or your PD array, your model show up, and then that should get us down to these lows down there. Okay. So yeah, that's my opinion on that. So hopefully that was helpful. But yeah, with that being said, I guess we'll put a ribbon on it. I appreciate you guys for hopping on. God bless y'all. And I will see you beautiful people here on YouTube bright and early on Tuesday of next week. And sometime next month, we'll do our little marathon again, where I'm live almost every day. 1 week out of the month for the next 3 or 4 months, right? We'll have that continuously going. But the rest of the time I'm with my private group. So yeah, I'll see you beautiful people bright and early here on Tuesday at, I'll probably be on at like 5:30, 6 o'clock a.m. Pacific Standard Time. And those of you in my private group, I will see you guys bright and early tomorrow. Okay. Let me know if you guys need anything. Hopefully you guys got value. Don't forget to like the video, subscribe to the channel. Shows me that I should keep doing this stuff and not just be with my private group, because I could do that, right? But I enjoy teaching you guys, so hopefully you guys get value. Let me know if you guys have any questions. Study the things that we talked about today. Note some of the perspectives that we had for where price is going to go, and we'll see how the week turns out. All right. So yeah, with that being said, God bless y'all. Have a great rest of your weekend, and I will catch y'all on the next one. Take care, guys.